I'd like to welcome Neil with us this morning at Mortgage Business Expo. What are the top 3 myths about equity release in your opinion?
The top 3 myths about equity release, and it really dates back to the 1980s when many different products and services were lumped under the banner of equity release, many of which I'm glad to say don't exist anymore. Fundamentally, I suppose the key questions that we get asked for confirmation on are the fact that your home cannot be repossessed if you miss payments. If you take a product sponsored and endorsed by the Equity Release Council, your house cannot go into negative equity. In addition to that, of course, you can still move house even if you've taken an equity release plan. That's probably the top 3, but there are others in addition to that around the lack of understanding around the products and services that are now available and the flexibility that that gives you as an individual taking out a lifetime mortgage.
There have been criticisms levelled at the equity release market suggesting that it's still very expensive. Is that a myth?
I wouldn't put that under the heading of a myth, but I think that's subjective because at the end of the day, if you compare it to APRs on credit cards, payday loans, even certain secured lending, and you have to position it as a whole as a product, because if you take into account the fact that the interest rate is generally fixed for life, that you don't necessarily have to make any monthly payments on that, the fact that clearly that will be offset by any rises in house prices through house price inflation, and I'm doing a presentation later on today which shows that there only needs to be a very small house price inflation to offset the interest actually that's accruing on the lifetime mortgage. But it's like any other financial product, it has to be assessed against the suitability for the client and other products, services or actions that may be out there and right for the customer.
Should equity release form part of more holistic retirement planning alongside, say, pensions advice?
Yes, it's a good point, because since George Osborne obviously announced the pension freedoms, which came in of April this year, people should be taking a more holistic approach to their retirement planning and the income that generates. Because now you can have uncrystallised funds pension lump sums, and you can obviously take all of that should you wish. That needs to be set against your property wealth and what's going to be the best thing to do for you as an individual. Clearly there is still annuities, there's still drawdown. The problem is though that you have financial advisors who are not qualified in equity release and therefore are looking at that whole piece holistically, and conversely you have equity release specialists who are not qualified in pension provision. So when you're sitting in front of a client and looking at that as a whole, it can be a bit of a problem.
Do you think that's something that the government's review of financial advice might like to consider?
I would certainly hope so. I know the Equity Release Council are in conversations with the FCA around that particular subject. The council and other providers are doing a lot of work promoting equity release to the advice market generally, and hopefully dispelling some of the myths and concerns around that, which are also prevalent in the advice market as well as the consumer market. And of course it will be a cultural change as much as perhaps something that's changed in examinations going forward may be a part of continual professional development, but certainly those 2 dots need to be joined.
Can you tell us a little bit about what the Equity Release Information Centre actually does?
The Equity Release Information Centre is a wholly independent specialist equity release broker. We are the longest established, we've been around since 1985. Our advice is wholly independent, we're not tied to any associations or lenders. We are able to offer face-to-face or telephone advice. All my advisors are qualified, employed, and we have no administration or application fees, so all the charges are very transparent. We do pride ourselves on the fact that we can search the whole of the market for the customer. In addition, we will very much, where appropriate, emphasise the need for our customers to speak to their families to make sure that they're comfortable with what they're doing as well, because clearly it will impact them potentially. And also, of course, to make sure that we are looking at means-tested benefits or anything else that might impact the fact that they generate this income. In addition, we're very fortunate that as a business, we do have direct access to fully qualified financial advisors who can take that holistic approach that we were just talking about.
What are the benefits for advisors of joining the Equity Release Council?
The Equity Release Council is very much promoting professional standards in the industry, which, based on the legacy issues that we've just been talking about, is something that's very much needed. They are ensuring that the safeguards are in place. To give an example, when you take out an equity release plan, you will have a solicitor, the lender will have a solicitor, and you and your partner, if appropriate, will have to sign with an independent solicitor to say that you are both happy with taking out a lifetime mortgage and it's not being done under duress. The Equity Release Council obviously has workshops, and it makes sure that providers who or advisors that don't perhaps do that much equity release are kept up to date with the latest information and trends. But their fundamental raison d'etre is to promote lifetime mortgages in the wider community and make sure it's a viable and safe product that should be considered quite seriously in somebody's retirement planning.